And a very good afternoon, ladies and gentlemen, and welcome back to the post-lunch session. बहुत बहुत स्वागत है आप सबका एक्सपेरिवा कॉन्सेप्ट्स प्रेजेंस भारत एक्सपो एंड अवार्ड्स 2024 business hub of accessible retail and trade with support of DPT, DPIIT, that is Ministry of Commerce and Industries. बहुत बहुत स्वागत है आप सबका and we would like to thank all of our partners for being a support to us. Gold partner B26, Recreated Perfumes, silver partner The First Home, bronze partner Infoneo Technologies, associated partner Edge Events, knowledge partner Rethink AI, supporting partner Consultancy Ventures, IBSEA, that is International Business Startups and Entrepreneurs Association, RCCI, that is Rajasthan Chamber of Commerce and Industries, marketing partner International Exhibitors, fabrication partner Grins Entertainment, strategic partner Meant for Cinematics, PR partner News Reach, and Startup News. Ticketing partner Tickets 99. Ladies and gentlemen, Bharat Expo and Awards 2024. It is an initiative by Experiva Concepts supported by Make in India, DPIIT, that is Ministry of Commerce and Industry, Government of Bharat, for Indian business owners, entrepreneurs, MSMEs, startups to encourage and recognize for their contribution towards the growth of Indian economy. Ladies and gentlemen, it is rightly said, अगर कुछ करना है तो हौसला ज़रूरी है और हौसले के साथ साथ ऐसी अपॉर्चुनिटीज़ मिले जहाँ पे आप एक जगह पे अपने प्रोडक्ट्स के साथ सर्विसेज जो भी है सब कुछ आप कस्टमर्स तक पहुंच पाए एंड दैट्स द वे Experiva concepts always urge to strive better and strive hard to reach to the maximum of people. एंड कहते हैं तू अपनी खूबियाँ ढूंढ खामियाँ निकालने के लिए तो लोग हैं ना तू अपनी खूबियाँ ढूंढ खामियाँ निकालने के लिए तो लोग हैं ना अगर रखना है कदम तो आगे रख पीछे खींचने के लिए तो लोग हैं ना सपने देखने हैं तो ऊंचे देख सपने देखने हैं तो ऊंचे देख नीचा दिखाने के लिए तो लोग हैं ना तो अपने अंदर जुनून की चिंगारी जगा चलने के लिए तो लोग हैं ना प्यार करना है तो खुद से कर नफरत करने के लिए तो लोग हैं ना तो अपनी अलग पहचान बना भीड़ में चलने के लिए तो लोग हैं ना तो कुछ करके दिखा दुनिया को तालियां बजाने के लिए तो लोग है ना तो can we have a round of applause for this amazing initiative being presented by Deva Concepts and to begin the panel discussion, ladies and gentlemen, this is on the funding and availability from startup to SME. And we have the moderator and the speaker with us, the panelist, Mr. Tushar Kansal, CEO of Consultancy Ventures, the moderator. Can you have a round of applause for him, ladies and gentlemen? Our panelist, Mr. Prashant,
So, 2015, when this entire space, started picking up, that is the time when I would say even the, the youngsters, I would say, initially it was the youngsters who realized that they can actually start their own ventures and they will get support from the government, and you see a huge surge in the uh, the number of startups that suddenly started. So primarily driven by the success of Oyo, I could see, when I used to go to these events, I at that time I was not very actively investing, but more as a consultant I was going, and I could see that there are a lot of startups which have just copied the model of Oyo, very similar to that, or they're doing something, very, uh, I would say similar to what Oyo is doing and naming it only differently. So there were, a lot of people raising money, and because there was a surge in this investment, so that time the mistake that startup founders used to make was that when this money came to them, they didn't know what to do with it. It was a fairly new ecosystem with investors also who are not so experienced when it came to angels, and the founders also didn't know what to do with the money. So they got access to capital. They started paying themselves very well. So we saw that people taking salaries of 3 lakhs a month without really building any business. So if you have raised 1.5 crores, you have given more than 50% of it as salaries to the two founders, and that money has not been used for building a business. And such startups which were there, they started kind of dying, because if they've not built any business, when they went to the second stage of investors, any micro VC funds or early stage investors that were there, people said that you raised 1 crore, you have not built any business with this, so why do I put more money into you? And that saw a closure of these companies, and you saw a sudden decline in the activity in this entire ecosystem. So events where there were 300, 400 founders sitting in the audience, now those events got shrunk to 30 founders. So the size became very small. Then again, the I would say investors also became mature here in the early stage investors, and with time, a lot of VCs also started coming in. At that time, again, the space picked up, and from 2018, you see again a surge in number of startups starting, but this time founders were more, you can say, wise, I would say, with the use of the funds. They decided not to pay themselves, but to build a business with the money, and that saw, that the company started growing. And when this started happening, there were more investors coming in, and even the interest from the VCs from outside India, because primarily the source of capital has been US. US has been investing in other parts of the world, so their focus was China primarily. So the largest ecosystem is US, then it was China, and then India was coming up. What worked in favor of India was COVID. When COVID happened, the entire focus, shifted from China in terms of investing to India. And Indian companies by then, they had scaled up to a certain level, and with the right approach of the founders, these companies attracted a lot of capital. And when there was plenty of capital between 2020 to 2022, mid 2022, or towards the end of 2022, we saw that because there was plenty of capital available, we saw that these companies, founders, I would say, were asking for whatever valuations, and investors were ready to invest. Now, again, the now this time there was another mistake, I would say, the ecosystem was making. So earlier, founders spent everything on themselves. Now this time the mistake was burning money and growing the business without realizing when this burn will stop and the company will become profitable. So it was only the scale that even VCs were wanting the startups to achieve at whatever cost. So I always say that if I want to make 1 lakh customers, I can stand outside this building and start handing out 10,000 rupees and making those my customers, and then I'll have 1 lakh customers very soon. But that is not the way a business is run. But the capital was being used by the founders to scale up mindlessly, and that is what even VCs were asking. Now, I related to that when the startups that scaled up to a level where they could go public. Now, why startup IPO concept was opened in India? It was primarily because the largest funds that invested, they said that in US we have an option of getting these loss making companies to list, and we get an exit, but in India it is impossible to get an exit, because there is these loss making companies cannot list on the stock exchanges, because SEBI rules don't allow. For them to get an exit, these companies were allowed to go and list themselves under the startup IPO scheme. Now, when these companies got listed, the large names that we all really follow, and we use them every day in our in our lives. But when these companies got listed, the market did not read them well, because the market was going by the fundamentals of P ratio, or looking at the profitability of the company. When the market thrashed these stocks down, suddenly VCs also realized that when I mean, India is a different market, and here the companies need to be profitable for, if you really want to go for the listing. And that is where we saw that companies which got listed later, they actually first achieved profitability and then they went for listing. They just took the benefit because there has to be a, series of years where you need to report profits. So these companies took the advantage of the startup IPO thing, that they were not profitable last year, but they were profitable this year, and they went for listing. Now, when this change happened, so when VC suddenly realized that they need profitable companies, so from the largest fund, percolating down to the angel level, everybody started talking about companies which will become profitable, very soon. So now, because these companies which were on a hyper growth mode at any cost suddenly had to remodel their businesses to become profitable, many of these companies were not able to do it, and they shut down in this process. And VCs were not even considering to look at them for further investment. However, there were companies which were pivoting now to become profitable. Now, whatever change they will bring in, it will take a lot of time because of the scale that they have achieved. They need to cut down a lot of, extra manpower that they, hired at that time. So all those changes would take a lot of time. And if the company can sustain, they will survive. Otherwise, they will shut down. Now, VCs constantly are asking for companies which have a very clear path to profitability. So now this transition phase, when this change was happening, VCs stopped taking riskier bets where there was no clarity on when these companies will become profitable. So from 2015, stage one, people spending money on themselves. Stage two, 2018, people scaling up businesses mindlessly, only following the top line, the growth, but not looking at profitability. Now, stage three, when we are looking at profitable, sustainable businesses. At this time, VCs, I mean, obviously the US market, the condition that it is in. So the VCs from US are not investing very heavily. They are sitting on, dry powder. They are not deploying that money because for them, uh, taking bets anywhere in the world, it is a riskier bet. And China got completely cut off. And Indian startup ecosystem is, I would say, it is maturing now. And now we see again, after a gap of 1.5, 2 years, that now investments have again started picking up. So what we see is that now companies that are being run by the founders, they are focusing on sustainable business models where they, think about what is the efficiency of use of capital. They are not, I mean, there's a famous founder, I won't name him, but he at an event said that gone are those times when investors used to put money without having any revenue in the books. So I was surprised. I read a book on a ed tech startup. It was its entire story, and I was surprised that such large funds were invested in. They invested during 2015-16, until 2019. The startup did not have any revenue model and zero revenue. They did not have any monetization model. There was zero billing, zero. So all the users of the, the solution were not paying for it, and still it was getting funded and the company was running. But in today's time, if you have such a business model, it will not get funded even by angels. So the VCs would not invest. So I would say, I mean, I have tried to summarize whatever I have seen in the last 8, 9 years, and what I see now is going forward, more meaningful businesses being formed by people, where you would see these companies, if they are not profitable now, they would know, okay, in year three we will become profitable at this level, and then we would need capital to, grow that business. So that clarity, that on the path to profitability is there, and that such companies definitely are raising money. And once the focus again, comes on in supporting of these companies from US, because domestic capital is right now, it is all focused to the listed space because it is giving very good returns. So people are, I mean, startups are always a riskier bet, but the kind of returns that startup used to give, the listed space is giving. So the entire domestic capital through mutual funds and direct investments is focused towards the listed space. But as the focus will come back to startups, which will come, we will see, you know, the startups that are being built that become large companies, and uh, they will be the jewels, I would say, in India's history, that will be responsible for totally transforming. We are seeing such startups right now also, but again, the time they were built, it was very different from the times that are right now we are seeing. So but I'm very bullish on the Indian startup space, which will really shine in the next 10 years, and we'll soon see all these corrections, all these changes that are being they are happening on its own, I would say. And as the startup space, as the investors all are maturing, I think this will become a more stable space, where we'll see a lot of companies coming and creating an impact in this on a global level. Yeah,
Very well explained. Thank you for that. Uh, so VC activity has become focused, and
yeah,
they are focusing on business models which are profitable or on the path to profitability.
yeah,
And so it could have also meant that people who are people who want to dabble in riskier business models like share chat where
yeah.
revenue is not coming, they are no longer sought after by VCs at all.
So, I mean, if it is a loss-making company right now, but if you cannot showcase that when it will become profitable, then they are not interested.
Sure. Coming to SME IPO market, so it is so hot. Like right now, 50 issues a month, and each getting subscribed like 800 times, 500 times. We saw Yamaha
Yeah, yeah,
dealership getting subscribed so much. So, do you think that you had earlier mentioned that businesses, not all businesses are venture capital fundable,
yeah.
so they will get a chance to finally raise capital. So, what do you feel about the SME IPO market, and does it aid your 56 investments in a way that they can also tap into this market?
Exactly. So, IPOs was an exit, route for VC funds or even micro VC funds in US. So, not all companies, can scale up to a very large level. So you start a business, you achieve a turnover of, say, I mean, Indian rupees, say 50 crores, 100 crores, and then you're a stable business growing at a 10%, 15% rate, and you're not scaling up to 1000 crores, 2000 crores levels, but you're still a good business. I mean, if you keep running it at a 15% growth rate, it will become a good, it remains to be a good business which is giving adequate profits and returns to the stakeholders. So such businesses may not be VC investable because they are not showing a hockey stick growth at each level of the business. Now they've stabilized. Now such businesses, once they have raised capital in the past, how do they give exit to the investors? So SME IPO, I would say, I mean, when I'm talking from a startup space, this has become an opportunity for the startups which turn into sustainable, profitable businesses at a certain scale. They can choose to go for SME IPO and create an opportunity for exit for the investors. So I would say any founder, any person who's raising capital should have this thing very clear in mind, that how would they give exit to their investors, be it an angel investor, be it a micro VC, be it a large VC. That founder needs to have clarity that, okay, my journey is like this, and I would eventually create this much of this opportunity of creating an exit for the investors. Because if the investors don't make money, eventually the business will either stagnate or it will not attract more investment into it. Now, uh, for any person who's running a business, they eventually dream of it to be a very big business. And as we all understand, to take business to a certain level, we need capital, and we need to eventually go past the debt mode where we can put our properties as collateral and take money from the bank. There are at a certain scale of a business, you get debt without collaterals also, but to reach that stage also, you need to grow at a certain pace, and for that you need capital. So from a startup space, I would say this is a very good I would say opening that now startups have got. The startups which turned profitable, if they are not able to raise money from VCs because they are not scaling up very fast, SME IPO is a very good exit strategy for us. And in fact, there are three companies in our portfolio which are looking at getting listed in the next 1 year, and uh, I would say we are really looking forward to that, because that will establish an example for other portfolio companies also, and others in the ecosystem, that yes, startups can also go and list as SME. You know, yeah,
Sure, sure. Thank you for that. Suppose there is a guy who starts investing. Say,
yeah.
I am a new investor. So should I do angel investing, or should I put my money in a VC fund, or should I put my money in a mutual fund, or should I put my money in a SME?
So so comparing a mutual fund and the startup space is a little I would say you're not comparing apples to apples, you're comparing apples to oranges, because of the risk factor that is involved. So I would say that startups are, there are riskier asset class amongst, all the asset classes that we know. Someone has to have the patience and the courage, I would say, to risk their capital. Not it is not people say it is a gamble. It is not a gamble. It is an informed decision that you're deciding to invest on a company. Now, between, say, direct, investment in the listed space, you choose companies, or you go the mutual fund way. It depends primarily, on the time and skill set that you have. If you do not have the skill set to evaluate companies, or you do not have the time, you give the money to an expert, that is the mutual fund manager, and they create a return for you by taking decisions of investment on your behalf. Similar is the space of angel and VC. So if you don't have the time or the skill set to evaluate startups, then you give your money to the VCs. And in case if you have the time and bandwidth and skill set to evaluate companies, that you invest in the companies directly, you choose which companies to invest in, then you can go the angel investing route. However, I mean, when we speak to investors, even large, I would say family offices, HNIs, ultra HNIs, we always tell them that, you start with a very small percentage of your net worth as investment in startups, and then grow it gradually. Don't go all in. And, uh, if you are, I mean, if you're a salaried person, if you have limited means, then I have suggested people to stay away from it, because for people who have limited wealth, if they invest in this, space, the challenge is that, you if you really want to take benefit of this space, you need to build a portfolio. So you go on investing, say, 1 lakh 2 lakh rupees in each startup over a period of, say, 3 4 years. So if you have invested in 40 50 companies, that means you have invested 40 50 lakhs, or maybe up to a 1 crore figure. If you have that much money, you enter this space. Otherwise, don't enter this space, because you will be subjecting your capital on which maybe your child's education or their marriage depends. Don't risk that capital in the startup space. This space is not for you then, if that money will impact your life in that major way.
Great, great. Very well explained. The the biggest thing, some college graduates, they approach me, and of course, people from who are already doing a job, they say, we actually want to start something on our own. So, is there something like, a list of sectors which they should preferably look at and say that, okay, no, you develop something in this sector because it is more fundable.
Hmm.
Is there something like this?
So there are VCs and there are angels to who have focus on various sectors. So if you ask me what is the preferred sector, so there can be seasons, So like in COVID, we saw the edtech season. Everybody was investing. Now nobody wants to invest, especially after the debacle of the large players. Now, edtech might not be the right sector, but what I see that definitely uh, you know people look at the latest upcoming technologies like I mean we all look at AI, ML, uh, automation, robotics. All these industries are preferred, but if you talk about sectors, so AI, ML can be applied to a lot of sectors. So what you are doing using these technologies in a particular sector, maybe you're solving a problem in the most innovative way, then each sector is equal in terms of an investor wanting to invest in it. What I say that if anybody is thinking of starting a venture, it is not that I mean I have a lot of friends who are well established and they have some youngster coming in, joining the business now, and because they have all the wealth, they will ask me that सर इसके लिए कोई लाइन बताओ, कोई एक कंपनी पर कुछ स्टार्ट करते हैं, कुछ करते हैं. So that is not the way to create a company which can make an impact in the world, because then you choose to do a business where there is a existing market and an existing demand which is there, and you're just trying to cater to that demand. So for a SME, it is a great space. You have an existing demand and maybe a geography which is not catered to. You go and deliver a service or a product which is available in other geographies, and you make money. But when it comes to startups which are primarily known for innovation, unless and until you have a very strong reason to work on that idea, something that comes from within, I believe, just for raising capital, if you start a startup, that there's a friend who has a good business running, and he said that I want to start this startup, and I said why? Why do you want to do this? And he said he's sent few examples to me that these people have created this startup in my space and they have done very well, so I also want to do that. I said, are you saying that you want to start this company because you want to raise capital, because you want to be known that okay, this startup has raised capital at this valuation? I said, then please don't do it. You will not be able to sustain it for a very long period of time, because see, we all have to understand when we run businesses, uh, if we do it only for making money, then we will not be able to create a mark in our field. We will be able to create a mark in whatever we are doing only when it is driven by our passion, and maybe I would say the purpose of your life, that you want to create this impact out in this world by solving this problem, or by serving people. So if you have that thing driving, then I always say that startup founders versus SME founders. SME founders are always restricted by, in their minds, I would say, by the resources that they have. They would always feel that we will not be able to hire people from larger companies because our company is small. We will not be able to scale up to that level because we do not have the requisite capital. So their mind gets restricted. But the startup founders, they don't restrict their minds to the resources that are available today to them. They will be driven by their purpose, their uh, the solution that they want to provide to the world, and they attract all those resources, including the capital, including the people, and anything that they want to make it a reality. So if I would say, when you say कि कोई youngsters है उनके लिए क्या sectors हैं, तो I would say कि sector से ज़्यादा एक inner drive है. Somebody coming from, say, a doctor's family might see that there is a loophole in the medical system which he has witnessed and heard about in his family, and is really touched and moved by that problem in the medical system. So if that person gets up and says that I have seen patients suffering because even my parents cannot help them because of this problem in the medical system, and I am trying to solve it by this way, I would be rather more inclined to invest in that person rather than somebody saying कि सर आजकल हेल्थ टेक में बहुत स्कोप है तो मैंने ये स्टार्टअप स्टार्ट किया है. I would not be really because that person is only looking at money,
Funding side.
funding and all that. So that is what I can say.
Sure. So coming to my last question, where does Prashant Narang and where does agility go from here? Like 56 investments, 50 crore fund, angel network,
Yeah.
and you are also doing SME IPOs,
Yes.
and you're also a CA. So where do you go from here?
So, as I would say, if you're doing a business, what do you aim at? You aim at becoming bigger in that. So that is what we also aim to do. So as we see that the startup ecosystem is again gearing up, and in terms of the VC interest that is there, so we see that in the years to come, we will be investing in more companies. We will be maybe uh, coming up with a new fund which is investing in these companies very soon, which would be a larger fund than what we had earlier. So again, waiting for the right time for the industry uh, to be again, I would say, back in focus from the investor side, and I believe uh, the biggest satisfaction that um, we get as a team, I would say me, my co-founder, and the entire team, that the value that we can add to the companies. And so being a CA, that I was earlier doing workshops for SMEs where I was telling them how to monitor their profits. It was primarily from a space of contribution. When I came in the startup space, nobody was talking about profitability. I felt like an alien. I stopped talking about it. But now again, I see that even startups, they have to focus on becoming profitable. So I see that I can add a lot of value there to the companies. So becoming larger in what we are doing is for our personal vision, I would say. On the SME IPO side, again, SMEs have started looking at, uh, I would say, a source of capital in the markets, because now they understood that if they really want to scale up, they have to let go of that feeling कि ये मेरी कंपनी है, मेरा बच्चा है, मेरे पास इसका 100% ओनरशिप होना चाहिए, why should I share it? I would say the younger generation specifically, they are more open to the idea that it is always better to be maybe a 60% owner of a 100 crore enterprise than to be a 100% owner of a 6 crore enterprise. So they are open to that idea, and I see that a lot of SMEs will are opening up, and they will create businesses which are investable. They will stop, I would say, manipulating the books, or doing whatever hanky panky things that they've been doing, and create real uh, valuable businesses where people also participate in their growth, make money along with them. And in the next 10 to 15 years, I see SME IPO space, or IPO space overall, growing. Right now there are around 5,500 companies that are listed uh, on the stock exchange. This number will double very soon. You can say in the next 6 7 years, you will see this number doubling. And so I would say that this is a great space to be in, and we again really want to contribute to the entrepreneurs. One, becoming IPO ready, and second, definitely getting listed.
Wonderful. But I just won't let you go just with one more question.
Yeah, sure, sure.
You wrote a book, right? Can you
Yes.
tell us something about that book? In short.
Okay. In short,
In-
no, I'll not read the book here. So the book is on cash flows. So as I said, before I started Agility, I was talking to entrepreneurs about the importance of monitoring profits and cash flows. So while I was doing that workshop, for the SMEs, I realized that to reach out to a larger audience, I should capture these thoughts in the book. So the book is titled Four Bucket Cash Flow. So it is a book on cash flows and how a SME entrepreneur should look at cash flows from a perspective to know whether their business has generated enough cash this year or not, and where that cash has gone. And in case the business has not generated cash, from where the cash was brought in, whether it was taking a bank loan, or you sold a property and put in money into your business, You should know each year whether you have taken out money or you have put in money into the business. And if you see, I mean, I have personally experienced, looking at companies with turnovers of 50 lakhs to 500 crores. Businessmen generally don't look at, cash flows as a tool to monitor their business. What they talk about generally is कि पिछले साल हमने इतने करोड़ की सेल करी थी, अब हमने इस साल इतने करोड़ की सेल करी, and our business is growing. And I would say कि, I mean, it is not my quote, but I read it while I was preparing for this workshop 10 years back, uh, that sales is vanity, profit is sanity, and cash is reality. I mean, you would have, if you Google it, you will find it all over the net. But the fact is that cash flows, they are the, you can say, the blood that we need to run our entire show. If that is not there, the fuel that we need. If it is not there, eventually the business can reach a point where it is to be shut down. And I've seen businesses shutting down because they were not focusing on cash flows for a very long period of time. And and definitely, if you see the valuations of a business, when we're talking about SME IPOs, when we're talking about VC funding, the valuations are always done on discounted cash flows. So you cannot actually, undermine the importance of cash flows. That is why uh, what I felt that if this book can create one change in anybody's life, so one entrepreneur is not the only person who gets changed. One entrepreneur getting changed, there are so many vendors, so many employees, associated with a SME, everybody gets benefited. So that is that is about it.
Sure. Thank you so much, Prashant. Wish you all the very best with agility and the
Thank you.
Angel Network, and thank you for coming.
Thank you.
Big round of applause to
Thank you.